Everybody, happy Thursday. Happy day after Fed day. Happy uptrend day. Happy day before the long weekend upside insanity day. Whew. Friday Junior, I like that one. Happy Friday Junior day. Ooh boy. Sometimes days like today make you have to check yourself into the loony bin a little bit. What's going on, Eddie Webb? What's up, Christian? What's up, Tate? Cody, Bandit, Bill in the house. Eddie Vic. 30 Thursday. What's up, Rich N? Is this supposed to be Thirsty Thursday? What's up, Joanna? What's happening, Anthony? I just covered one of my positions. What's up, Dalakir? What's up, Ben? All right. I am an associate member of T3 Trading Group, which is an SEC broker-dealer and member of FinRecipic. All of my trades are placed through T3 Trading Group. I got to get Josh's name off that. You should carefully consider trading whether... Wait, what? What do I usually say next? You should carefully consider whether trading is suitable for you in light of your own financial condition. And there's the position disclosure. Look at that. On an actual dollar basis on my positions, I'm still net long. But if you factor in that TQQQ and UPRO or 3x leveraged ETFs, I'm net short. So I'm net short. Feels weird. It's unlike me. But it's not by an extreme degree, because I still do have these longs on. But I'm not short. I got out of Snap, I got out of Google, I got out of Target, I got out of KRE, I got out of JP Morgan, I got out of all those today. Out of Apple, that I've been out of that for a few days, and really lightened up on the other things that I'm still long. So yeah, I'm sitting here net short. Very weird for me. It doesn't mean that we can't go higher. We definitely can. Let's take a look at this. How do we close today? The SPY is up 1.1%. Felt like we were up like 20% today. SPY is up 1.1%. The Qs are up 1.1%. The IWM still is not really participating the way you want it to, up 0.65%. Let's go over the videotape. Let's take a look at some charts. Intraday trend today to the upside was really crazy. And we talked about it, right? We talked about it in the morning meeting. This morning we discussed how the day after the Fed is very often a trend day. We discussed in the morning meeting that the technicals of the market are bullish. They're bullish. They're very bullish. And coming into today, we had kind of satisfied a large degree of the upside extension, you know, but just between some technical rests and technical pullbacks. So if you guys remember, the way that I've been judging extension, and I view extension on all time frames based on where the market is trading versus the space between the 8 and 21 EMA, which is the area that I broadly consider to be technical equilibrium. On the big picture for the SPYs and Qs on the daily chart, I've been saying $10 plus of extension is, you cannot buy things and you want to be looking the other way potentially if a setup comes in. $6 to like $9 of extension is what I describe as no man's land. You don't want to be doing buying because you're too extended. You don't really want to be coming in and shorting because we could extend further and you could get in trouble. And you know, less than, you know, $5-6 of extension in the SPYs and the Qs means that, yeah, you know, you might still be extended by $2, $3, $4, but you are not so extended that you can't continue higher. And coming into today, we found ourselves in that area with the SPYs and the Qs. It's a day after a Fed day. If we're just judging this purely based on where the 8 EMA is on the daily chart, we were like $4 extended or so, I think, this morning when we were doing our morning meeting on the daily chart in the SPYs and the Qs. So not so extended that we can't continue. The technicals are bullish, so broadly, as long as the extension isn't too much and the technicals are bullish, you're better off being long than short. Everything else held equal, and obviously everything else held equal is a term from my economics classes once upon a time that we live in a world where nothing else is ever held equal. So, SPYs, Qs, and the IWM all said, hey, we're bullish, we're not that extended, we can certainly continue. On top of that, it's the day after Fed. Day after the Fed is very often a trend day. Looking at the technicals of the market, trying to figure out this morning, could today we trend higher? Could today we trend lower? The truth was, I felt very uncertain about it. If you look at just the surface of the Fed meeting yesterday, and actually let me take a step back. Why is it that the day after a Fed day is very often a trend day? Well, the Fed announcement happens at 2 p.m. Every time there's a Fed announcement, it happens at 2 p.m. That gives you, if you're a big fund manager, if you're placing bets after 2 p.m., you don't really have a lot of time to fully digest that information. So a lot of fund managers aren't necessarily, it's 2:01 and the Fed just came out, let's load up to the long side or the short side and make huge decisions. They're not doing that in 1 minute. The algorithms are. The algorithms are going crazy. They're giving us volatility. They're giving us that initial spike down that kind of reversed a little bit to the upside, all in that 2 hours yesterday. But the fund managers that are operating with a lot of money, a lot of times they're going to take the night to think about it. They're going to digest the information. They're going to go in. They're going to do research. They're going to really digest everything that the Fed said, that Jerome Powell said, and then make their decisions the next day. So the next day is when all that money really gets put to work, and that can really create a trend higher or lower. So thinking about it, most of the time if there is a news-based event, they tend to move the market in the direction of the technicals. That's something I've seen over the course of my career. The technicals are bullish, so that means that, again, everything else is held equal, which is a term that I don't love. Higher probability of us going up versus down today, provided that we don't have too much upside extension, which we did not. But that's not as simple of a process for me. I need to be thinking about everything. So really kind of digesting the information from the Fed myself. If I'm a fund manager, which, to some degree I am, I'm a prop trader, but I'm also, managing a portfolio here. If I'm a fund manager, I'm asking myself, well, what do I want to do based on this? Because it was a pause. That's dovish, that's bullish for markets. But it was a hawkish pause, and it was probably a more hawkish pause than the market initially expected. I don't think that the market was expecting a dot plot of 2 additional hikes this year, and that's kind of what the Fed has shown us. And the pause was already priced in. So I think if you just look at that, it's probably a little bit of a hawkish surprise, which would be bearish, which could bring us down. But then you got to ask yourself on some second or third level thinking, is the market going to potentially call the bluff of the Fed? Is the Fed only even coming in and saying this because they don't want to see the market doing exactly what it's doing, which is just continuing higher and higher and higher and create this wealth effect? In which case, they're not really looking to do 2 additional hikes. They're just saying that because they want to try to stall things a little bit to try to help inflation continue to come down. And on top of that, if you look at some of the other stuff that came out from the Fed, the expectation of GDP improved, the expectation of employment actually continued to improve, even though they actually want that to deteriorate. They want that to deteriorate a little bit to help drive down inflation. And then when you kind of get to that second or third level thinking, the thought process could easily be bullish. So coming into today, I can see both sides of that story. I could see us selling off. I could see us getting bought up. I know that the technicals are bullish, which implies that a higher probability of getting bought up. But there's some things that we've been noting that are starting to come in under the surface that are concerning technically. The spread between the 8 and 21 EMA is continuing to widen, and this market is basically going parabolic. Parabolic markets, by definition, cannot last. They can go longer than you might expect, right? I like to bring up that JKS example from 2021 or whatever, where it just kept going and going and going. And you also want to keep in mind that it's much easier for an individual stock to be able to move like that than for an entire market. So markets can go parabolic. A great example is the Chinese market in 2015. It just kept going and going and going. It was absolutely insane. But that the VIX extension of the downside, the degree of VVIX divergence that we're starting to see, the spread between the 8 and 21 EMA, the fact that we're going parabolic, maybe they use this as an example as a reason to come in and sell it. And if they come in and they sell it, then you're looking at some of these stocks that could break these ascending channels that we identified. I think I brought up like Amazon as a specific example, and Amazon still didn't have a fantastic day. But Amazon's channel here, like if this starts to break, if Amazon starts to get below yesterday's low, markets work in feedback cycles, and what creates a trend, an uptrend is a pattern of higher lows and higher highs, a downtrend is a pattern of lower highs and lower lows. What actually creates trends in markets is feedback cycles. Feedback cycles of buying, feedback cycles of selling. Buying leads to more buying, right? What has like really significantly changed over the course of the last few weeks from when the SPYs had huge resistance at 417 and are now at 443? Or you want to take an even crazier example, look at the Qs. What has really changed in the Qs over the course of the last few weeks when we were just at 324 that brings us to 370? That's so dramatic. I would argue not a whole lot, but markets work in feedback cycles. The breakout happens. New longs come into the market because of the breakout, momentum longs. The higher the market goes, the more the shorts that we know are heavy in this market. The data that I last saw was maybe a month ago that showed that hedge funds are more net short than any other time since, was it 2011, 2012, something like that? Well, the more this market goes up, the more the shorts are getting squeezed, the more the trend followers begin to come in, and the more the chasers come in. Pat was given the example of his buddy or whatever who, hits him up that the end of the world is coming every time we hit a major bottom, and hits him up that he's about to be a bajillionaire every time the market does something like this. And always comes in on the other side of the market, like kind of, standard retail trader thought process. The point is that's the feedback cycles that kind of come in. So coming into today, trying to figure out the game plan, the truth was I don't know. I understand both sides of that story that could lead to continued move to the upside. I understand the story that could continue to move to the downside. Speaking of feedback cycles, if we start to break that ascending channel in an Amazon, then fine. It could lead to even further, deeper selling. Today was just not a day, and I know I ended up doing this a little bit myself, but I started very conservative. Today was really not a day to come in on the other side of the trend. Today was a day to, all right, well, I'm not sure which way that trend's going to come in, but let's figure out which way that trend is coming in and let's follow it. The trickiest part for me about today was the IWM not participating. Like we saw pretty right away these Qs starting to go, these SPYs starting to go. I remember calling when I was on the radio for a QQQ long off the 10 a.m. low. This is that hammer trend continuation pattern that I really like. And we've talked about this pattern actually recently in some meetings. Really like this pattern. And if you know that today could be a trend day, and hey, this is a trend continuation candle on the 5-minute, and we're starting to clear above, what did I say in the morning meeting? The key levels to pay attention to are the post 2 p.m. high and low. So we're clearing above the post 2 p.m. high from yesterday. I get this continuation hammer into the ADMA. Great spot to go long. So there were opportunities to go long. I think, where was it that we called the 15-minute pivot? Here. And then we called out this 15-minute pivot. Like, oh, now it's 10:35. This is where we understand time of day. Oh, it's 10:35. This is usually where the 15-minute chart becomes more important. So now I probably need a 15-minute pivot. Look at this 10:30 candle on the 15-minute chart. Same deal. This is also a trend continuation hammer that ticks into the ADMA on the 15 before giving continuation. You can go long off all that stuff. And in the beginning of the day, that's what I was calling for. I was constantly concerned throughout the day about lack of participation from this IWM. The IWM still barely was able to get above that 2 p.m. high, even after the insanity of the rally that we started to see into the close. But at the same time as I pay attention to that, what do I also pay attention to? I pay attention to my extension rules, right? This morning when I was doing the morning meeting, what did I say? I said SPYs and Qs are $4 extended from the ADMA. That's that lower level zone where there is a lot of ammo for this market to be able to continue to the upside. And they were able to do that. But we went from QQQ daily chart at the open, like $4 worth of extension, to getting up to just about 372 in the Qs with the ADMA at like 360. So we went from $4 of upside extension in the Qs to $12 of upside extension in the Qs. And it's once we start to get to that $10 plus of extension, it doesn't mean, because we got to remember, momentum is a heck of a thing. Momentum means that the higher a stock or market goes, the more people that want to buy it, and that creates even further and further buying, especially if there's a news event or there's a volume event. And we did have a news event that we're continuing from today / this morning that's creating this move. It's not impossible for, even if $10 of extension is that area where you don't want to be buying anymore and you want to look for shorts, it doesn't mean close your eyes and go max buying power short. It means, okay, where's the signal? Is there a signal? Because $10 of extension can become 12. We mentioned that as recently as May 30th at highs, this day the Qs gave $14 of upside extension before correcting. And honestly, $14 of upside extension can become $18 of upside extension. It just means that when you're at this point, the risk, reward, and probability of success actually begins to favor the other side of the market. Keeping in mind, though, that we are now in an established uptrend intraday for the SPYs and the Qs, and you want to be very careful with it. So for me, just continuing to do the exact same strategy that I've been doing every time we reach these levels of extension, which is sell off my longs, not 100%, I've still got longs on. Like I said, if you just talk about the pure dollar value of my portfolio right now, I'm pretty equal weighted, still slightly to the long side actually. But if you then add on that, my biggest position right now, my biggest position outright is TQQQ, and that's actually 3x leveraged. Then I'm net short. But we hit this point where we got $10 of extension. Not only do we have $10 of extension, this market's going completely parabolic. Spread between the 8 and 21 EMA is getting massive. We can continue higher tomorrow, and I'm prepared for that. Even though TQQQ to the short side is my biggest position right now, I am fine and I am comfortable continuing to have to short this market into 375, 376 if I need to. I'm ready to be able to build into that. Sorry, 1 second. I'm ready to build into that kind of as necessary to continue my trade here, because the price time correction will happen inevitably. It will happen inevitably. It's just a matter of kind of being able to afford it happening. And that's the big thing that I keep talking about with this counter trend stuff, because we've been doing a lot more of it recently. I greatly prefer to be with the trend. You know, what's the easier money today? Probably it was a little bit more exciting when announcing, like, I stepped back to my desk. I had to step away from my desk. I saw Qs were all the way up here, approaching 372. I hit my TQQQ short button, sell short button, real heavy there. Announced it. That sure sounds exciting to go counter trend when you're looking at it, but just look at these charts. Is it easier to be just long with this market, or is it easier to be short with the market? It's easier to be long. It's easier to be with the trend always. But it's in these periods of extremes where you can do one of two things. You can either get heavy short on a specific signal with a tight stop loss off of that signal, or you can do a little bit of what I do, which is be light, especially initially. Recognize that $10 of extension can become, in a really extreme situation, $16 of extension, and begin to build in. And for me, when I do that, because I still have the longs on, it acts both as a hedge and a trade at the same time. And I continue to work that position for cash flow, as kind of we've discussed in the past. And at this point, with the degree of extension that we have into the close, I recognize that it'll be very easy and may almost even be probable for the market to get above today's high tomorrow. But I'm prepared for that. I can build in a little bit further on that. I'm fine doing that. And I'm also recognizing that the more up we go, the more parabolic we become, the more extended we become, and we are inevitably going to have this market touch the ADMA at some point in the future. Whether it's because eventually, and this will be the most bullish case, we just start going sideways and those moving averages catch up. I'm fine with that. I'll be able to work my position intraday back and forth to be able to make money, or we have just a deeper pullback price correction after a parabolic move where we come down, and that'll be even easier for me to make money on the short side. So that's kind of where we're at. I mean, today was crazy. Today was nuts. It was exciting. I love trading sessions like today. This is exactly what we want. It was a very profitable day for me, even though at the end of the day here I'm down a little bit of money in TQQQ. I'm down a little bit more money, honestly, in CCL and DAL. I'm short both of those names. I'm positive in UPRO. I'm positive in my Tesla short. My longs just that I have on just continued to pay me in a really big way also. So it turned out to be a really profitable day, and I feel comfortable just kind of with my positioning as I'm coming into this market. Tomorrow is Friday. I was actually excited because yesterday I was so light overnight. Relatively, still I was 100% long coming into today, but I've really been piecing out into this move, and I feel really light. So I'm actually excited, or at least I was excited. We'll see what happens with the market tomorrow, to go into a 3-day weekend, like almost lighter than I've been in a while. And why am I so light is because, well, honestly, because I've made a lot of money in this move, and go into a 3-day weekend kind of with like less on my shoulders from that perspective than quite some time. But now that might not be the case. Depends on how much I start continuing to build into the short side and what this market does tomorrow. So we'll see how it all plays out. But really exciting day. I hope it was a really profitable day for everybody that was out there. I think as a team we were super on point with the focus. We recognized pretty early on that the SPYs and Qs were going. There was some concern about the IWM. We called out some of these continuation longs in the Qs and the SPYs and certain individual stocks. We recognized where the relative strength and relative weakness was, and it worked out great. And then at a certain point, we said, like, okay, probably no more buying. These daily charts are getting too extended. And then, like Pat, like always, just super on point. Pat is a much more precise short seller than I am. Whereas for me, I'm a little less precise, and I'll recognize that sometimes they get a little bit bigger, and I'm more kind of building into these positions, into that extension. Pat's just so precise, just that call out in the SPYs at basically the high of the day here in that last hour was just phenomenal. So the money was there to the long side. The money was even there to that last hour to the short side. As far as individual names, like the biggest, earliest focus, at least for me, was Tesla short. And Tesla, while it had a great upside initial move here to fill the gap, Tesla still finished down 0.8% on the day. So for me, this was still able to be a pretty profitable short, even with the market doing what it was able to do. So yeah, crazy day. And at the same time, I was getting back into KRE yesterday into the close, and then into this dip, and that was able to make me some money. I got back into JP Morgan this morning, and 140 something, was able to make a little bit of money on that. Google I had built back into and then liquidated, so the money was definitely there on the long side also. And I think that's all I got. So I'm happy to answer any questions that you guys have. First thing I'm seeing here is from Eddie Vick. I remember you mentioned SQQQ and TQQQ comparison. Would you mind me asking again why choose to short TQQQ over going long the SQQQ? Sure. So all leveraged ETFs are subject to decay, and I could try to explain how the math works, but you're honestly just better off Googling it. So like in theory, if you had an ETF and then a leveraged ETF, and the ETF goes up 1%, 3x leverage ETF should go up 3%. That's true if they go vertically straight up that 1%. It's not true if it does that with a whole lot of volatility in between, and that's just the way that percentage math works. So if there's a lot of volatility that takes place, but eventually the regular ETF is up 1%, and the leveraged ETF is not going to be up 3%. It's going to be up 3% less a degree of decay. So that creates a performance drag on the 3x leveraged ETFs. So if you are going long SQQQ, versus short T triple Q over enough period of time with enough volatility, they'll both get weighed down a little bit by the decay. Therefore, that makes shorting T triple Q the better idea. I mean, the best way that you can see it, you can just look at the chart. Take XBI versus Labu, which I'm also out of now. Let's go back in time here a little bit. Let's look at this peak here. Actually, let's see. Let's go actually to right here. April 13th, XBI has a high of like $90-ish. And like today or yesterday, it's also trading right into $90, okay? So in theory, if I'm looking at a chart, what did I say? What date? Right here. April 13th. XBI is trading at about the same price on April 13th, 2022, a little over a year ago, as it is trading right now. Now let's look at the 3x leveraged XBI, which is LABU. In theory, it should be right now at the same price that it was on April 13th, 2022, or actually higher, right? But let's take a look. Not even close. On April 13th, Labu, the 3x leverage ETF, was $15.78 at its high. Now it's $7.40. It's down 50%. XBI, same components. It's just one's leveraged and one's not. XBI has made its way all the way back to that $90. Labu, the 3x leveraged ETF, after 15 months is down 50%, right? And that's just how the percentage math causes these things to work. So I would rather, everything else held equal, be short T triple Q and have that decay on my side than long S triple Q and have that decay against me. The X factor that I always say I haven't done the research on, the X factor is overnights, right? If you are short overnight, then you're going to pay an overnight borrow cost to borrow the stock. What I don't know is the overnight borrow cost equal or more than the benefit of the decay, right? So on an intraday basis, and on an intraday basis is not going to have nearly as much of an effect. But on an intraday basis, even if it's just my own psychology, I'd rather be short T triple Q than S triple Q. On an overnight basis, I don't know. I honestly don't know. I don't know if I know that if there was no borrow cost, then it would be better to be short T triple Q. But there is a borrow cost, and does that borrow cost make up for that decay? So I don't know. That's it. Right. Yep. That's exactly what I'm saying. And I don't know what the overnight borrow cost is in T triple Q. I would not imagine that it's a lot, but I genuinely don't know. So that's the answer to your question there, Eddie Vick. From Michael. At a prospective market pivot, what about a neutral position, short S triple Q and T triple Q until it moves and adjusts per market direction? I was clumsily counter trend. So you're talking about some sort of pairs trade there. I don't know. I've never really researched it or done it. I've done some pairs trading in the past, but not like one ETF versus the other. I'm gonna imagine that there's no real benefit from doing that, and it's probably difficult to manage. I don't really have great feedback for you on your question because it's just not really the trade, how I trade, and what I focus on. So I feel like for some reason it won't work. Your long your short S triple Q and your short T triple Q. I mean, if it's on an intraday basis, you're not dealing with the overnight borrow cost. If it's on an overnight basis, you're dealing with borrow cost on both. I don't know. I don't know. I think it'd be hard to manage from a if you're trying to be exactly neutral between the two positions. It means that you're going to have to be adding to one as the other one moves. It just seems difficult. I see Ben just saying space. I don't know if there's a question on space or not. How is it just moving after hours? What got this thing going here after hours? Earnings or something, up 22%. This is another name that's got a big short float. The short squeezes are just absolutely brutal right now on this market for short sellers. You gotta be very careful being short anything that's got a large short float. Scrolling through here. Zach, I think it's based on the shares. I'm pretty sure it's a per share cost. That's something you can ask the trade support team though. Virgin Galactic reports start of commercial spaceflight service. There you go, up 24%. What's Adobe doing after hours? Whew. Adobe not helping my Q short. Though the Qs are down slightly from the close. What else, guys? Anything else? Let me check if there's anything on the YouTube. Not seeing any questions on the YouTube. Okay. Crazy day, but if there's no questions, I can wrap it up. All right, guys. Well, great day today. Hope everybody crushed it. And see you all tomorrow morning, I guess. Take some time to relax tonight. Take some deep breaths. Maybe have a beer if that's your thing. And I'll see you all then.